Hi, in this video we are going to talk about a handful of financial functions. We're going to talk about depreciation and we're going to talk about values. Feel free to open up and follow along with me the file that is attached to this content named Financial Functions Week 4. So let's start with depreciation. So we have an example here of depreciation, a couple of examples. We have declining balance and we have double declining balance. So in the declining balance example, it returns the depreciation of an asset for a specified period using the fixed declining balance method. So if you're running a business and you purchase an item, you can take depreciation off for tax purposes. So the item depreciates a certain amount every year through the period of its life. So in this particular case, I'm going to, actually I think what I'll do is I'll show you the formula in here. So the declining balance is, we start off with the equal sign. Remember, there are 4 items that you want to have for a function. The equal sign, the name of the function, which is dB for declining balance, the parentheses, and then the arguments you are passed. The first argument that we're passing lives in cell B4, which is the cost, the $2,400. The second one is the salvage. So at the end of its life, it is expected that the salvage price would be $300. In cell B6, this is the period, so the life is over 10 years, and the month is, the life is over 10 years, and the period or the month in this particular case is this first amount here, which is, in my case, lives in cell B7. So if I escape out, what this is basically telling me is, if I go back in, is that if I had an item, and let's say instead of 10 years, let's say that the life was over 6 years, that over the course of 6 years, and after year 1, the depreciation would be $703.20. At year 2, $497. At year 3, $357. So each year we're losing a little bit more in the value until we get to the end of those 6 years. And notice that I've summed my B9 through G9, and I end up with $2,100.27. Well, my cost was $2,400, but if you recall, my salvage was $300. So there's the difference right there. So it's nice that we have the ability to do this. So my next example is double declining balance. Now this returns to depreciation of an asset for a specified period using double declining balance method or some other method that you specify. So it could be considered double the amount, or unless you specify. So here I have double, which is the factor of 2, factor of 2, factor of 2. Here it's 1.5, so I'm depreciating not as declining balance, but a little bit faster, and then 10th year's depreciation. Now I have pound number because here the 10th year I've changed it to not have 10. So let me put my 10 year back up. And what this is showing, if I go back into my formulas, is that double declining balance is the cost is again in cell B4, the salvage, what's the value of it after the life, so $300. The life is over 10 years, and in this case my period is, I have 10 years times 365 because I want it to have just that one day. So day 1. So after day 1 I have a depreciation already. Now if I look at my second formula, I have a similar, but instead this is after the first month. So I have 10 years, but I'm multiplying it by 12 because we want to look at it from the standpoint of 1 month. So I have my B6, which is my life, I'm multiplying it by 12 because I want to look at it in terms of months. In my third one, I have the first year a factor of 2. So after the first year, I haven't done anything with my B6. I'm just leaving it as is. So at the end of that first year out of the 10, so here's at the end, and I have the factor of 2, which is double declining balance. And my second year's depreciation factor of 1.5. So I have the same setup, only here I have the 2 being after for the second year's depreciation, and the factor of 1.5, which is the 1.5. So how do I get into any of these pieces? Well, if I go up to my formula bar and I go into financial, let's take a look at double declining balance first. So here I can set this up using a dialog box. So I could set this up as my cost was here and my salvage was here, and I can set this up. All right, I'm going to cancel out of there, but I wanted to show you that that's where you could do it. Also, you have the power of the F1 button. So if you click on F1, what you would see is a help facility will pop up, and if I type in DB, let's say declining balance function, and I have this declining balance function, I can click on this, and it gives me some examples of what I could possibly do with this. So this is really nice that I have this here. Now if I wanted, instead of declining balance, if I wanted to look at DDB function, I have results for. Now if I click into here, again, I have some possibilities in here as to, it's nice because I get examples of what it is that I want to do. So it's really nice that you have that ability. You have the examples. When I'm done, I can just little X out of the help facility. Okay, so let's now go take a look at values, present value and future value. So I have a couple examples here. Let's look at the present value first of all. This is a financial function that calculates the present value of a loan or an investment based on a constant interest rate. You can use this with either periodic constant payments, think of it as a mortgage, or a future value that's your investment goal. So if I put away $500 for 20 years at 8%, right, that's what I'm looking at here. So if I double click, or if I go into my formula here, what I have here is my present value. So I'm reading my formula in cell B8. My present value, so I have the 4 items, the equal sign, the function, the parentheses, and now what I'm passing. So I have my rate. Well, my rate lives in cell B3, but I'm going to divide it by 12 because I'm going to put money away monthly. And then I have my number of periods. Well, the number of periods lives in cell B4, 20 years. However, I'm going to multiply it by 12 because I'm putting it away monthly. And then because it's coming out of my pockets, I have my payment, which is my $500. So now if I escape out of here and I go and I look, basically if I save $500 for 20 years at 8%, the present value of that money would be $59,777. Now looking at future value, a little bit different, but this calculates the future value. So this is the money that, the present value, this is the annuity. The future value will be calculated if you invest based on a constant interest rate. And let's look at this one using our formula. So here I have my future value. So again, the 4 items, the equal sign, the function FV, the parentheses, and then the arguments to pass. So I have my interest rate, which lives in cell C3, but I'm dividing it by 12 because I want to know every month. And so here I have C4, the number of periods. So I have 1 period, and I'm multiplying it by 12 because I'm putting it away monthly. And the payment would be $1,000. So what this is telling me is that if I was to put money away monthly, the future value of this setup, putting aside $1,000 at 12% for 1 year, doing it monthly, would be $12,682.50. So again, using my F1 button, I could go into present value, and I have my present value function. Now what I wanted to show you here that's really nice is that we have an Excel formula coach. So you have the options similar to what we had in declining balance and double declining balance. We have syntax and we have nice examples here that we could use, but we also have this thing called the formula coach. So you could use the Excel formula coach to find the present value, and at the same time you learn how to use in a formula. So it's really nice that you have this ability here. So take advantage of the formula coaches whenever they pop in, and it will give you a nice little setup, and you can just plug your numbers in to see if in fact what you expect is what you're getting. Right, so let's see, I think I'll just leave that one as a min right now, and then we'll X out. So you have a couple of options here, and if I was to do future value, FV, future value function, and if I go into my future value function, again, not all of the formulas or the functions have formula coaches, but a good number of them do. So it's yet another way to assist you in creating formulas. Thank you.